Given this uncertainty, should I buy stocks now? Sitting out of the market shouldn't be an option given the confusing mismatch between Wall Street and Main Street and the uncertain global economy. Every month, tens of thousands of individuals search for, "Is it a good time to purchase stocks?" on Google. It's a complicated question that is more influenced by your investment objectives and time horizon than by how the market is performing on any particular day. If you have money set aside for investing, and won't need the money for at least 5 years, then yes, invest. If you invest for the long run, you will have time to recover losses even during market lows, which 2022 has seen a lot of. The US economy was still in flux in 2021, and unexpected events continued to spook the stock market. However, the US market grew by 9.5% in the last quarter of 2021, according to Morningstar. The conclusion is that trying to time the market doesn't work. Instead, it's preferable to determine what to buy, and when, based on how quickly you want to accomplish your goals. It makes sense why investors would be hesitant in 2022. Volatility has been brought on by both consecutive hikes in interest rates and record high inflation. In 2020, the market rebounded swiftly, which was clearly at contrast with the American economy. A deeper examination reveals that this imbalance might not be as mysterious as it first appears to be. The stock market does not represent what is happening right now, but rather how investors feel about the future. Retail investors may be more likely to buy and sell based on daily headlines than institutional investors, who tend to look far ahead. Consequently, the stock market's performance might not necessarily be indicative of the health of the economy. Additionally, the S&P 500 is market cap weighted, implying that performance will be more impacted by larger businesses. Time in the market versus market timing. It matters more how long you keep your investments than when you first start. It's easier if you just invest for the long term. You shouldn't invest money that you might need in the next 5 years, since it's likely that the stock or mutual fund you buy will lose value quickly. You could have to sell your investment before it has a chance to recover, which would result in a loss. But if you're investing for the long run, you're less concerned about those short-term declines. Your retirement or long-term financial objectives will be easier to reach as a result of compounding profits over time. Treating investment contributions like monthly subscriptions, or dollar cost averaging, is one of the greatest ways to keep calm and stay invested during times of turbulence. By using this strategy, you avoid trying to timing the market by investing a certain sum of money at regular periods, such as once or twice a month. By doing this, you are, in theory, investing at different prices that would eventually average out. What stocks should I purchase now? During times of economic uncertainty, certain stocks do better than others. But rather than attempting to choose equities, the majority of investors would be better suited making regular investments in index funds. So how exactly do you enter the market and begin dollar cost averaging? Combining this with equity funds, such as exchange-traded funds, is a frequent technique. You might use your online brokerage account or retirement account to set up recurring monthly, or weekly, or bi-weekly contributions into an ETF in order to dollar cost average. By taking this course of action, you would benefit from diversity and dollar cost averaging in a hands-off way that is intended to create long-term wealth. So, regardless of what is occurring in the markets, advisors say the answer to the question of whether it is a good time to purchase equities is straightforward. Yes, if you start with small sums through dollar cost averaging, have a long-term investment plan, and invest in mutual funds and ETFs with broad diversification.